Hello everyone and welcome to Morning Markets. My name is Chris Leyland and I am Director of Investment Strategy here at True Potential. So just looking through the key moves yesterday, and probably the main headline that you will have been reading is a positive one. And that is that the US index, the S&P 500, touched an intraday high. So the US market at one point yesterday was higher than the pre-pandemic levels that we'd seen in February. So what was this on the back of? It was on the back of good housing data showing that the National Association of Home Builders, the Wells Fargo Housing Index in the US, had rose 6 points to a level of 78 points. So that matched the series record set in 1998, and it was also ahead of expectations of 73 points. Strong earnings from Walmart and also from the DIY retailer Home Depot also helped to lift sentiment in the US. Over the rest of the day, some of those gains were pared back, but the S&P still finished up around about 0.2%. If we look at what's been happening within currency and within sterling, the British pound touched over 1.324 versus the US dollar, and that's for the first time since early January on Tuesday. And there's two sides to that. So it's been boosted by both dollar weakness, but also around the Brexit talks with the EU. So I know that's something that Jeff mentioned yesterday on Morning Markets. So Britain's Brexit negotiator David Frost said that an agreement between the two sides on their future relationship could be reached as soon as September, even as they were still divided on some of the key issues such as fair competition guarantees, the so-called, level playing field, or on fisheries. At the same time, we also saw dollar weakness, so the dollar hit a 27-month low due to uncertainty over whether US lawmakers would strike an agreement over the new coronavirus relief package. So basically looking at that extension of things such as unemployment benefits. If we look to this morning, the key data point is that in the UK, inflation, so the UK annual inflation rate, CPI, has jumped to 1% in July, and that's from 0.6% in June. And it's also again ahead of market forecasts of 0.6% and also ahead of the Bank of England's expectations. So it's the highest reading since March as the restrictions caused by the coronavirus pandemic have eased. The largest contribution came from the cost of recreation and culture, followed by clothing, followed also by the largest monthly jump in a decade for prices at the petrol pump, and furniture and household goods as well. So this is important as inflation is creeping back slowly up towards normal levels. Although the 1% level is higher than we've seen over the past few months, it still has some way to reach before it hits the Bank of England's 2% target rate. However, we are seeing some commentators saying that today's rise in the annual inflation rate could actually be potentially temporary, as the VAT cut for food, non-alcoholic drinks, accommodation and attractions could push downwards on the annual rate for August. If we look forward to what data releases are coming out today, you can see that the Federal Reserve, the US Central Bank, are releasing the minutes from their previous meetings. So this will be really interesting because it will give guidance around the US Central Bank's thoughts on the economy and also monetary policy moving forward. So again, a lot to digest, a lot of interesting things happening today. I hope you enjoyed today's morning markets, and I look forward to speaking to you soon. Thank you very much.